Ravi Kataria is Managing Director of Investment Imperative. He's joining us right now on the show. Ravi, thanks for your time. Good afternoon. So let's just get straight into stocks. You're putting out 4 ideas. And, 3 out of the 4 ideas are, at all-time highs or very close to all-time highs. I mean, 10-15% away. Apar Industries, Tube Investments, NMDC, and Technocraft Industries. Let me ask you to pick what you want to talk about first. The reason I'm doing that is because I want you to talk about the one where you think there is absolute upside. I mean, not something in which one should hide in or relatively it will do better, but on an absolute standalone basis, what do you think out of the 4 that you're recommending will do the best?
See, Apar Industries is our strong pick. The company is commanding 3/4 of its business from power space. It's into transformers, oils, cables, and government is targeting, say, 24/7 power for all. And so it's imperative that there should be a revamp in T&D, transmission distribution space. So they have aligned projects worth 1.5 lakh crores in FY17 and 18 into this space. And Apar being commanding more than 40% of its market share in transmission oil, as well as more than 20% in conductors business, stands out to be a clear beneficiary of those projects. Our company has expanded its bottom line in the first half of 2017 by 70% because it's gaining, say, good exports growth in conductors. It has got a good, say, mixed product mix and increased efficiency. So all these, say, reasons would say, target higher prices for the company. We are expecting doubling of, say, operating profits in next 2 years. So you come out at the price target of around 774 for the company.
Okay. 774 for Apar Industries. NMDC is anyway at their 52-week highs. What could be the potential upside from here, and what is the story?
Sure. NMDC, largest ore producer, is operating out of mines in Chhattisgarh and Karnataka. Chinese steel companies are acquiring ore globally for supporting their steel companies and, say, infrastructure space and real estate spending globally. So the ore prices are expected, as per our calculations, anywhere between 55 to 70 USD per ton. NMDC sells at 20% lesser than the global prices or import prices domestically to major players here. It's operating at capacity of almost 90% of 36 metric tons per annum. The company is targeting, say, expansion of its extraction capacity up to 50 MTPA in, say, next few years. It's also targeting, say, forward integration by setting up a steel plant and a pellet plant. So these factors, we see that the company would see higher operating margins in the upcoming quarters, especially in the first half of 27, when the demand of the, say, global infrastructure spending is high, which would drive the steel and ore prices. So that's why we are recommending, say, revision in a price target 162 in FY18 and more than 190 in FY17 and 18 respectively.
What about Tube Investments, Ravi?
Sure. Tube Investments is into 2 spaces, manufacturing and financial services. Manufacturing, as they are into bicycles, electric scooters, electro engineering equipments, tubular components, and on the financial services side, they are into NBFC, Cholamandalam Investment, with more than 34,000 crores in assets under management, and insurance, which is in partnership with the Japanese company to which they sold a 40% stake last year. We are positive about because the company has announced its demerger plan of the financial services and manufacturing divisions. The FS space, we see it's commanding lower valuation because of the combination of the manufacturing. It would also open up, say, more avenues for expanding into manufacturing. On the manufacturing front, like they're commanding good international traction in cycles and equipments division. In India, they are second biggest player. They are, say, entering into joint ventures to push into the northern India market. So considering these multiple factors, we see the company would command at least 25-30% upside from here in FY18 itself. So the demerger is the main story and the way they're expanding their manufacturing business.
Okay. And finally, on Technocraft?
Yeah, sure. Technocraft is into scaffolding systems and engineering services commands like 2/3 of their total revenues. And then they have textiles division, fabrics, yarn, which commands almost 1/3 of its total revenue. Now in scaffolding systems, as the investments in smart cities and infrastructure in India grows, the scaffolding would command, the Technocraft would command more orders in that space. They have also got all approvals from US and Europe for supplying scaffolding systems there. So the company being a preferred supplier from India, we see the order book expanding towards, say, at least double in scaffolding. They are into, say, drums closer as well. They're expanding their capacity in that space. The fabric space, which was not seeing profitability till last year, has turned profitable this year. The value-added products in the yarn division and the revival of fabrics would help in garnering more operating margins in the upcoming quarters. So all in all, when we combine, we are keeping a price target of 462 on this stock.
Ravi, thanks very much for your time. It's a pleasure. Good speaking with you, and I hope our investors benefit from that conversation. Thanks indeed.